Hello there, VV Nation, and welcome to our special presentation this week titled A Tale of Two Stocks. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I'm delighted to be the coach for this session. It's going to be hopefully fun and engaging, and really is something that we've been doing here at VectorVest to show people around for a long time. We're going to take a deep dive into a couple of stocks and help you guys determine which one is a better investment over the other. With this kind of day and age, every day it seems we're being bombarded with information, financial news, stock tips, media chatter, endless market opinions. So how do you know what's noise and what's useful information, right? That's where VectorVest really comes in and shines. So today we're going to show you how to quickly use our tools to cut through all of that clutter so that you can make the smarter, more confident investment decisions. We're going to walk through stories of what appears to be two very similar stocks on the surface, but end up being two wildly different types of performance. And so when we do that, we're going to reveal why one of them outperformed and the other floundered, and how you could have seen that coming. So I'm going to show you how to evaluate a stock using our tools, value, safety, and timing, and how to spot red flags before they become big losses. So whether you're a seasoned trader or an investor, or you're just starting out, this session is going to give you some practical insights you can apply immediately. So it's time to stop guessing and start investing with clarity. So let's get started. So yeah, this is the big dilemma: noise versus insight. I mean, it's like a blizzard of data coming at us every single day. And deciphering what data is more important than others can be very challenging. And so there's a lot of good stocks out there, but ultimately some are better than others, and even the good ones. That's the challenge, right? Fundamentals, they can be complex and overwhelming to a lot of folks, cutting through all of that information and finding what's truly valuable. And ultimately then the wrong choice, using the wrong information, can cost us time, money, and ultimately opportunity. And so we're going to provide the solution, how you can be a lot more confident with your stock comparisons. We're going to follow clear, rules-based stock analysis. We're going to use that and parlay that into easy to understand ratings that we have in VectorVest for value, safety, and timing, and also a very simple and effective chart analysis methodology. And so when we get all of this right, boy, it's really going to set us on a better course for the future for our investment opportunities. All right, so let's jump right in to sort of the main event. And I'm no Michael Buffer, but let's get ready to rumble. Okay, we're going to take a look at a couple of stocks in the same industry, do essentially the same thing. You have an up-and-comer who's really starting to pile up some wins versus the old undisputed heavyweight champion of this industry, Chegg. So Stride, the up-and-comer in the red corner, versus Chegg, the undisputed old heavyweight champion, the George Foreman of the industry. So who's going to win and why? That's the ultimate decision, right? So if you're going to bet on it, who's going to win this boxing match and why? Let's jump right into VectorVest and take a peek. All right, so here we are at the homepage, and let's say we got a big tip, and we heard that there's this up-and-comer, really strong online educator that they were talking about on, say, Fast Money. And I want to look them up in VectorVest and see how they stack up against what I knew at one time was the strongest stock in that segment, right? Or I want to compare one stock to another. It could be really any scenario, even across industries if you chose to do that. How do I get that done in VectorVest? How do I check it out? How do I see if what the analysts and everybody that I was watching are on the right track? So what we do, we go right up here. We go to the Viewers tab. We want to go find something. So we're going to go to Viewer, or we go to Stock Viewer. And right up at the top, we can find some symbols. So maybe this was on the lightning round from Kramer last night, or it was in Barron's magazine, whatever the case might be. And if we don't know the symbol, we can type the company name either way. so we can go find Stride, right? And we can bring that one back. You can look multiple symbols up at the same time. So if you already know the symbols, for example, you can just type them right in there. Hit enter. It's going to bring them back immediately. And we will walk through it. All right. So first thing that we're confronted with when we come into this viewer is, of course, the name and the symbol. Then we come into the exchange that these entities are traded on, both New York and for New York. Okay. They both trade options. That's the little X next to the exchange letter. That tells you options are available on those securities. Then we start to get to the actual data, right? Now, price is a decision point. And one stock is trading at $153 a share, which might seem high to a lot of folks. Whereas the other stock is now trading at 71 cents, which seems alluring, I'm sure, to some. The whole thrill of the fast return on investment. If this thing goes up 25 cents, that's a pretty good return on 71, right? So this is where pitfalls begin to creep in if we're not careful. So let's keep going across and then try to separate. Is $154 really the one that's cheap? Or is it in fact the 71 just because it's only 71 cents, right? So as we go across, one of them's going up today and one of them's going down. Of course, I had no idea that would be the case since I put this presentation to get together yesterday. But it does happen to be the case today. Not too surprised. We're going to see why here in a little bit. Value is your first piece of proprietary data supplied by VectorVest that you can't get anywhere else. It's our own model, right? And I think that is a wonderful segue into this piece. I like to show people how to do the fishing themselves versus just give people all the fish, right? So one of the things we can do is we can write, if we don't know exactly how that's computed, you can at least get the most information possible by right-clicking and going to View Full Stock Analysis Report. And I would encourage a lot of people to print this out and put it on their desk or somewhere where you have it handy to where, as you're learning VectorVest at least, you can go down through this report. And if we have questions on something like what is value, it's going to tell us right here. It's going to give us first, kind of the scores. Then it's going to tell you whether that's favorable or unfavorable. Anything in green, of course, is good. And so it says, LRN has a current value of 197 compared to a price of 154. This stock is currently undervalued. Okay, so price is well below it's what VectorVest feels the stock is truly worth. It says here value is computed from forecasted earnings per share, forecasted earnings growth, profitability, interest, and inflation rates. And so, value goes up when companies are making money. And the more money they make, the higher value goes. And particularly when they're outpacing the sum of inflation and interest. Okay. So that's just giving you a little bit more background there. But it's telling you exactly what this is looking at. And so the main message is we're doing all the work for you. We know what's important in how to value stocks. And thereby, we're pulling that data in and giving you the ultimate answer. And so that's going to be the case for each of these columns, okay? Now, as we continue to move across here, the next piece that we come to is RV, or relative value, right? And that's if I use the smallest definition possible, just think of RV as upside potential, right? How does this stock stack up compared to a similar investment in a AAA corporate bond? Which is generally going to give me the better return? And so, anything above 1, it's on a 0 to 2 scale. Anything above 1 is favorable. The higher, the better. So, for example, 1.4 or greater is deemed excellent in our software. 1.25 is very good, and so on down the ladder. So we're in the top shelf. We're in excellent rating with Stride at 165. Okay. Next indicator we have is relative safety, right? Relative safety is how consistently and predictably the company is making money quarter after quarter after quarter, year after year after year. Okay, it's the predictability of financial performance. So again, we're top shelf. We're above 1.4. They do just about as good a job as anyone in the stock market at making money quarter after quarter after quarter, year after year after year. Now, who doesn't want to buy a company that does that? Because money goes where money grows, okay? Companies who are making more and more money, they just go up and up and up in price for that reason. And so what we now see is a fundamental analysis fingerprint for these two stocks. On one hand, we have Stride, who has tremendous upside potential and does so very safely and predictably with their earnings. On the other side, we have Chegg, who is trading under its value. Look at this. So 71 to 94. But the RV is below 1. RV, relative value, is not the same as valuation. Okay. That's something I think trips some folks up. Value is simply what the stock is currently worth. Relative value is what's the upside from here. Okay. And that's largely going to be dictated by earnings and earnings growth. So you're losing 44 cents a share. And guess what? It's deteriorating even more in the future. Okay. And so on one hand, you've got a high growth stock who's making a lot of money and growing it about as fast as anyone. On the other hand, you have a company who's doing nothing but losing more and more money seemingly out into the future. So now you're beginning to hopefully understand why one stock is ranked higher than the other. Now, these are two extreme cases. That's the best way to prove out the methodology. Okay. Anytime you're looking at a stock whose numbers are more favorable in both categories, that's a better overall quality stock, even if the other stock has strong numbers, right? So this is helping you figure out what are the better opportunities and doing it very, very quickly. Then we get to the sort of the technical component here in how we rank stocks, and that's relative timing. Right? Relative timing is looking at ultimately the price trend, but it's the dynamics and magnitude, and there's a lot of factors baked in. Okay. Anything above 1, stock's going up. Anything below 1, stock's going down, and doing so right now, but also sort of over time. Okay. We look at day over day, week over week, quarter over quarter, year over year, slightly weighted actually more towards the quarter than anything else. From an investor standpoint, we want to make sure that there's some strong sort of momentum and magnitude and dynamic to that price movement. Okay. So 147, I know without even opening up the graph that this stock is moving up the page quite nicely very recently. And when looking at Chegg, I know the opposite is true. That stock is moving down actually at an even faster pace downward than Chegg is moving up. That's a really low relative timing score of 0.35. Okay. So when all factors are considered, we rank every stock every day, any list of stocks by this indicator here, VST, which comprises all three of the prior. Okay. So what we want to get in the habit of, if we're investors, trading can be a little bit different, but as from the investment hat, okay, what are some of the best picks for the future? And not the future few days, but the future months to years, right? And when we look at that, Stride has clearly begun to separate itself from certainly Chegg, but also from a lot of stocks in the stock market altogether. Very few stocks are carrying these kinds of numbers across the board right now, even after some pretty significant rally up off the lows. Okay, so VST is how we're going to rank them out. That gives you the best combination of those three factors, RV, RS, and RT. Right? Now, what we can also get into is looking at some graphics and put some pictures to all these words that I've been using. And we can also see maybe when at some point in the future, we want to get a little bit more cautious with even Stride, who's hitting its stride right now. But when they start to stumble, right, what are the warning signs? So that's what we want to get into here next, right? We can clearly see it's the better opportunity now, hopefully. But let's look at the charts and see what they can tell us. All right. We'll start out very surface level and then we'll dig in. So I'm just going to graph these up. We take everything off except for price. This is the first observation I want you to make. Overall, how's this stock moving across the page? Realizing there's been some turbulence in the stock market, right? But generally is moving bottom left to top right in a pretty steady clip. Yeah. And if we go back to 2 years even, let's see, get close enough. Boom. Look at that. Bottom left to top right. Okay. Now, if we go to the other stock, what's it doing? Top left to bottom right. Okay. And so just quite simply in analyzing price directions, which stock do you feel better about over the next several years versus over the next maybe several days? All right, now what we want to do next is start to look at why price are moving the way they are, right? And the biggest determining factor there is going to be your earnings. Now, earnings, what we're looking at here is earnings per share, and we feel that that is the most important component to look at, okay? So that's the one that you want to, if there's nothing else on your graphs, you want that one. And it's also important to understand that we look at a lot of data. We look at a lot of trailing data, and we also look at the next couple of years of what's being claimed in the future. And these are consensus numbers, okay, from as many as that are out there. And so when we're looking at earnings down here, this isn't, Stride is meeting and beating each time it comes up to bat. It's also taking into account what their earnings are likely to be in the future using those forward 2 years, okay? And so it extrapolates all of that into a 12-month forecasted leading indication of where earnings are a year from now. So the most current data point is where we are a year from now, not where we are today. And so if earnings are continuing to push up even to a year from now, right? Markets like to look ahead. That's a really good sign for the stock. And oh, by the way, they just had earnings yesterday. This is a Chappell's Champ stock, so I'm very familiar with it. And they hit the cover off the ball again, And so good earnings report, and it's continuing to fly here. A lot of analysts have buy ratings on it. I think the lowest rating, I believe, is a hold from all the analysts right now. So, all that's ancillary, but it's good. The most important thing and the reason why is that earnings and that earnings out into the future. That's the most important piece because that's what creates value. Remember, we talked about earnings and earnings growth need to outpace the sum of inflation and interest. And the more they do, the higher value goes and so on, et cetera. Right. So that's what's pushing the value in this case. Fortunately for us, way up above price. Doesn't have to be the case. Stock could be trading at a premium even with really strong numbers. Some of the best stocks in the stock market often do, right? But the fact that we can catch this at a very fair and reasonable price, an undervalued situation, makes it even all that much more appealing. And also, dare I get into this subject, a little bit more tariff-proof type of industry here where you're dealing with education and ongoing education. So it's K through 12 and beyond and, all that kind of stuff. Whereas if I go down to Chegg, also very similar, but, value is continuing to go down the page and, price is leading the way. And again, that's because look what's earnings. Remember, all these were for the coming year, right? So you could have seen all of this bad stuff was likely going to come. Doesn't mean that it absolutely has to, but it's likely going to be the case. And guess what? It's likely going to continue to be the case. And so while there's all kinds of interesting articles out there on the internet right now about how they're going to use AI to sort of change their business and, all of this stuff, right? Well, they really need to because they're getting themselves into a whole heap of trouble. So you better try something. So that's the tale. That's the story, right? The story is, one, they're only going to get better if they incorporate AI, and they're already really great, The other needs to incorporate AI to try to save their business. You see what I mean? So these are the kinds of things that you want to look for. Now, this wasn't always the case for Chegg, and it may not always be the case for Stride, right? There was a time where earnings were rising, and occasionally you'd level out, right? But eventually things really started to tip over, particularly right around in here, right? And but the difference is it's no longer up to sideways. It's now up to down. Things are really beginning to change, right? And market's no longer hitting higher highs. It's hitting lower highs. And all these things add up to, earnings are no longer going to be able to support the stock price, particularly since the stock is trading way above its value. And that's another thing to really pick out. When stocks are trading well above their value and earnings really begin to miss, stocks get clobbered. So this was the big miss over here, and it just got absolutely hammered, right? All right, so hopefully this has begun to at least raise eyebrows for a few. We always have new folks coming into VectorVest all the time. And what we want to get in the habit of doing is buying stocks who their earnings are going higher month after month after month after month, if at all possible, but certainly year after year. It's pretty difficult for your earnings to be up every single month that you own a particular stock, but you certainly want to see that they're higher every 6 months to a year. And that's what's going to continue to support that stock price movement in the future. And you can see that this stock has done that in spades. 2019, 2020 higher. Look at this, really unaffected by COVID. In fact, probably helped the business model quite a bit. Earnings went higher that year, went higher in 22, marginally higher in 23. And stock price didn't do all that much, right? But as they really started to hit their stride, that's when stock prices really began to take off. And remember, this acceleration here was for the coming year, not for the current time. And guess what? Stock price accelerated, right? Very recently, you had even more acceleration. And guess what? That's for the coming year from then. We're only about a quarter of the way into that year right now. And guess what's happening right now, right? So you see it? Is it making more sense now? This is your window of opportunity into the future. Looking at earnings per share. It is tremendous. It's the single most important and valuable indication that I've ever learned to use here at VectorVest. We talk about it every chance we get, every opportunity, because it's what drives stock prices higher and higher and higher into the future. Or it's also the indicator that drives stock prices lower and lower and lower into the future. And while there might be some trading opportunities on those stocks, they are not good investments. So hopefully that drives everything home. Because guys, gals, this is information you cannot get anywhere else. It's why VectorVest is in business today and is a market leader in educating people on what are the right stocks to be looking at. What are the right stocks to be thinking about buying? We will see you next week with your next presentation. See you then.